Welcome back. Markets around the world plummeted today. The Dow falling over 1,000 points. NASDAQ fell for the first time in history 1,000 points in a single day of trading at one point before they actually recovered a little bit. The NASDAQ did. Japan tanked, kind of where it started, the worst day since 1987. That combined with our rapidly growing debt and last week's dismal July jobs report here in the U.S., some of the culprits of what we saw today. Employers added only 114,000 new jobs in July. That's below expectations. Unemployment went up to 4.3%, the highest it's been in nearly 3 years. All of this coming as we all just feel that we're not in a healthy place. And we've felt this for a couple years now. The question, though, is what happens tomorrow? For that, we have some of the best minds around. Steve Forbes is chairman and editor-in-chief of Forbes Media. He joins us now along with economist Peter Schiff. Gentlemen, good to have you both. Steve, starting with you, is this the start of what, let's be honest, this is a well-deserved correction if it does come with what we've done to this economy, with how much money we've spent?
What you're seeing with the economy is a slowdown. The economy has not been as good as the numbers have portrayed.
Yeah.
You look at that jobs report, most new jobs have come from the government or businesses related to the government. In the past year, 500,000 full-time jobs have been eliminated, 550,000 part-time jobs have been created. So that jobs report paints a very dismal picture when you actually look at the innards of it.
Yeah.
We're not creating jobs. And businesses are now facing growing inventories. Sales aren't quite what they used to be. Even well-to-do people are starting to draw back a little bit. So yes, we're heading into headwinds. And the question is, what props can the government pull out to get them through the election?
Exactly right. Peter, you've been predicting, some pretty dark days coming for a while. How do you assess what we saw today?
Well, I think it got started with the jobs report on Friday. But by the way, you showed the graphic of a 4.3% unemployment rate. That's a lie. The U6 rate is 7.8. And up until 1994, the U6 rate was the only rate they reported. And I took a look. And for the 52 years going backwards from 1994, there wasn't a single year where the unemployment rate ended as high as the unemployment rate is right now. So it's a lie to say that we have low unemployment. We have high unemployment. We have a weak labor market, but we also have inflation. And that is the big problem that the markets are going to be grappling with, because they're now starting to price out a soft landing because we're already in recession. We've been in recession all year, probably for a good part of last year. They will eventually officially acknowledge it. But when the Fed cuts rates, and maybe they'll wait until September, or maybe they'll think they have to rescue the markets by cutting rates sooner. But when they cut rates, they're going to reignite inflation. So they're not going to stimulate the economy. They're going to stimulate inflation. And Americans are going to have the worst of both. They're going to have a deeper recession, but even more inflation. It's going to be stagflation that would make Jimmy Carter blush.
And so it sounds like, Steve, he's saying that there's really maybe no way out of this, that, that some pain is going to have to be felt, that the Band-Aids that they have are not going to work. What do you think of that?
Well, the pain's already being felt by over half the population now with their monthly bills.
Sure.
One of the things that the CPI and other indexes don't include is the interest you pay on mortgages, the interest you pay on auto loans, the interest you pay on your credit cards. For some reason, they don't consider that a cost of living.
Yeah.
So the real inflation rate is about twice what the number is. So in terms of what can be done, we got to have a total change in this administration. And a key thing is the White House, because even if Republicans get control of Congress next November, but Kamala Harris somehow slips into the Oval Office, the deep state, the regulatory state, will continue issuing regulations to wreck the economy. Look what they're doing to student debt. Courts say you can't do it.
Yeah.
What do they matter?
Right. Peter, what's your prediction, the next 6 months? You indicated that it feels to you like there's no way out. There's nothing they can do to make this problem go away. What do you think happens?
Well, there's nothing that they could do that is politically feasible for them to do. I mean, they don't want to do what's necessary. We need massive cuts to government spending. We need less regulation. We have to deal with the problem of entitlements. There's a huge debt bubble, and it's not just in America. Why do you think the Japanese market is collapsing? Yeah. They left interest rates too low for too long. The Japanese government took out a lot of debt. Now interest rates are finally starting to rise, and that whole debt, bubble is collapsing. The whole world was creating inflation, and now those chickens have come home to roost. Nobody really wants to deal with that reality, and I think it's going to start to take a toll on the market. We have an overvalued stock market. That's going to have to come down.
How far do you think the Dow goes down?
Well, I think there's still a lot of downside in the Nasdaq, even more than the Dow. There's more value names there. But ultimately, I think the Fed is going to try to prop the markets back up by creating more inflation.
Yeah.
That may have worked in the past when they could pretend that inflation was below 2%, but it's not going to work anymore. They're going to go back to that game. They're going to have to do quantitative easing, because I think when the Fed starts cutting rates, long rates are going to go up this time, not down.
Yeah.
And then the Fed is going to have to do more QE, which is just create more inflation to try to artificially suppress the long end of the yield curve. I think that's going to kill the dollar, and that's going to send gold and other commodities much higher, and that's also going to take consumer prices higher.
Oh, it sounds like some kind of a catch-22. I know everybody today was talking, and yesterday was talking about how Warren Buffett had all this cash piled up, and they said that's not a good
cash.
It's not a good sign. Yeah. All right. Peter Schiff and Steve Forbes, gentlemen, thank you so much. We appreciate it.
Thank you.